Hey, good morning. It's Michael Neuenschwander, Outlook Wealth Advisors. I just wanted to uh, reach out and kind of touch on, sort of the volatility of the market, particularly here over the last couple of days. Thursday, Friday, beginnings of Monday is all over the place, but Thursday, Friday, no other way to put it. It was brutal, it was ugly sort of a scenario where the whole market, based on sort of the news of the tariffs, coming in sort of worse than expected, sort of threw the baby out with the bathwater, kind of scenario. But I also want to put it a little bit, in perspective, where it says last time the market sort of behaved this way, when we got to go back to 2020, was actually the beginnings of the pandemic. And obviously the pandemic was a much different scenario. In that case, we were basically shutting the world down, for 2 to 3 months before things really started to turn around. And so in that period of time, in the course of a month, the S&P, the general market measure, was off about 32%, in that month as the pandemic hit. Um, Obviously, today the market is off quite a bit, here over the last couple of days, but we're still nowhere near a 32%, level. And so, as we look at things, what we have today is largely self-inflicted. The feeling hopefully is that as most of those announcements were made, and then China with their retaliatory tariff there, that maybe the worst of the news is sort of out there. At this point, it's mostly just giving it some time for some additional renegotiation, countries coming back to the table. As of this morning, supposedly there had been maybe 50 countries that had reached out to try to renegotiate and have some better terms than was initially thrown out. And so the market, as of now, is sort of trying to find its way. It's been all over the place today on Monday, from opening down, 1,500 points to being positive 300 points, and then back and forth, a couple of times. So we still have a ways to go this morning or this afternoon. So we'll see what happens, but it does look like the market is kind of beginning to try to find its footing, if you will. But let's look historically, because if we look at back at the pandemic, we look back at a 2008 scenario. Typically, when we've had periods of very short, compressed, a week, couple of weeks, in this case, even a couple of days, where the market has reacted, it's purely emotional, and looking at it and saying historically, making big moves during this time is usually the wrong thing, to do. Uh, However, when we look at the reality as well, if you've got big expenses, big plans coming up, whether it be a house purchase, take big withdrawal. If we're looking at that, we also want to look and say, well, where are things in terms of your cash position, so we can plan for those distributions. For many people, as we look at things today, again, up until Thursday, Friday, most of the conservative stuff was holding up, perfectly fine. Obviously, as I said, most everything got hit on Thursday, Friday. And so as we look at it too, also a little perspective helps of saying for most people, we're about in the same overall financial position as you were maybe 6, 8 months ago. So, and as we look going forward, that's more than likely kind of what we'll see too. Fast forward 6 or 8 months, at least historically speaking, we may be, as I said, finding sort of the worst of things, maybe better off as we get there. Unfortunately, the couple things I can't, promise or predict. Is that recovery process, is that going to be just a couple of months as countries come to the table and we find out a lot of these tariffs don't stick, or there's a lot of exceptions as we've seen? Or is that recovery process going to be more 6, 8, 9, 12 months down the road? Of course, the market is throwing all the fears at things, saying, well, is this going to pull us into a recession? And I'm not going to acknowledge, or I'm not going to deny that obviously the longer things stick around or the worse the tariffs are, that becomes more and more of a concern. So that's what the market's trying to price in right now. But the expectation is that here over the next few days to the next week, that a lot of these terms sort of get redone. And at that point, the market will sort of move forward towards recovery mode. The other things coming later in the year, additional tax law coming that will either be status quo, or as they're kind of indicating, maybe some potential tax cuts to go with it. And then with that, the Fed lowering interest rates. So both of those two things the market will generally like and will help stimulate the economy. But right this time, we're sort of in the worst of it. So I wanted to give you a quick note, kind of say, here's where things are at. In general, this is not the best time to be trying to make big moves on a portfolio when we have this kind of volatility over just a couple of days. But at the same time, in your personal plans, if we're looking out, 3, 6, 9 months, and there is some needs for beyond regular distributions, let's make sure we're talking. So we've got a plan and a strategy to make sure that we've got that money available for you when it's needed. So on that note, obviously, if you do have individual concerns, things you want to talk about, please reach out to us. We're continuing to monitor things, and in some cases, looking at things where positions are basically really attractively priced compared to the way they were a few weeks ago. So, even beginning to look at positioning additional cash that had been on the sidelines. And then as we get through the worst of volatility, there likely will be some additional reallocation across portfolios. So once again, I hope this helps. Have a good rest of your day. Thanks, Michael.